Hello traders, the dollar is having a bit of a comeback. EURUSD is challenging some interesting levels and stock markets are wobbling. My name is 𝗿𝗲𝘁𝗶𝗹 and this is an ATFX market update. Alright, good. So it is a little bit shaky, I would say. So we had the minutes, the Fed rate minutes published yesterday, and they're not indicating any sort of imminent change to their stimulus packages and interest rates. And that was something that the market was anticipating. So we are seeing stock markets being lower a bit, but they have been going up for quite some time now as well, right? So we needed some sort of correction, and we're seeing that right now as well. I wouldn't take too much attention to what's going to happen over the next few weeks. The reason for this is that we are at the very end of August, and it is summer holiday period in the northern hemisphere, so people are not very active. And you know what, at one point we will see reversals across the markets. I don't doubt that. Like I talk a lot about Bitcoin, for example. I was long Ripple myself. I had a nice little healthy gain, but Bitcoin failed and Ripple failed even more. So when it was always coming back down to my stop level or entry level, I actually got out as well. You know, there's a few other things here that have a bit, you know, like crude oil, for example, that's just been stuck and not really giving us too many signals. So we're starting to see a little bit of an end maybe of the trends, but we're not there yet, and that's what we're going to talk about today. So let's begin, and we're going to take a look at the EURUSD. So this is your euro, and as you might remember, we reached these levels on July 28th, and then we were going up, and then we came down, and then went up, and my general idea was to buy here and to book profits around this high, and we ultimately did reach that high. The market even went a little bit higher, everybody got excited, and then the market pulled back down to support. Now from a euro-dollar perspective and a trend perspective, we're still in an uptrend, and there's no reason to challenge that view as long as trade above 117.53. And as for a target, I'm treating this like a double top, which is what it is. Difference between these highs and these lows gives you this target, which is 121.20. So I'm going to continue to be bullish there. Here's GBP versus the USD here as well. Over the last couple of weeks, we said look to buy here. The market finally went upwards, and you know, if you booked profits here because you bought here, that's good. If you kept it, you know, and you got a little bit more, even better. And now we're coming back to a support, and if you look at this is a 6-hour chart. We have about 1 hour, and then this candle is going to close, and these are all reversal bullish candles. It's just suggesting we can go upwards, but again, we're pretty much back at the same levels we saw on July 30th. So for almost a month now, we have not seen any major changes, and we could potentially be in a position maybe like we saw here between April and April and May. Really, this whole month was a bit like that, because ultimately this is not just going to continue to gain forever. I mean, if you look at the EURUSD, it's just been going up and up and up. Obviously we try to ride it for as long as possible, but we need to be realistic here with our expectations. Here is dollar versus the Japanese yen, and I'm happy to look at it again. I looked at it already yesterday, and I was bearish from this level, but we missed that entry, so we're going to push it down a little bit like that. And if we do swing up to these levels, this would be the 106.13 level, then I'm going to be bearish. I'm be bearish below this level, thinking that we're going to come down like that. Aussie dollar versus the USD, we talked about this one in the past, that it was the buy down here for this to go upwards. That went really good. We had opportunities to get out when we reached these levels. If you wanted to keep it, you could do that as well a bit, but obviously we're the best to book a bit of profit here. The market is now under strong pressure, but as long as it's above 71.07, I'm going to remain bullish. If we look now at something like crude oil, gold prices, gold prices, you know, they're a bit volatile. I mean, the volatility here is rather normal. And my view is, you know, if you really wanted to trade, then you could be bullish between 1963 and 1926. But I said myself that I don't want to get involved with this one just yet, because I'm a patterns type of guy, and yeah, we have an uptrend, but we don't have a really solid pattern. And normally when you have a big shakeout like this, you have more volatility, and that is what we're seeing here. So we try and trade a little bit lower. Now it doesn't matter for the big thing or for the big outlook. You know, the big picture outlook remains bullish, but realistically, you know, we're trading within some sort of a triangle possibly, and we need to see some more. We're going to see probably some more sideways price action between these two levels. See, let's do it like that. Between 1848 and this high, which is really the interesting level, and the trend line here. And my big picture outlook remains bullish. Well, we don't have to rush into this unless you know, very bullish. Then maybe you can rush into this, be bullish about this low here from August 11. But personally, I'm just gonna let this consolidate further, and maybe 2 weeks from now or so we'll have a breakout. Now here is crude oil prices, and been very boring, unfortunately. The general idea has been to buy above 41.05, between 41.77 and 41.05, and you know, we've been going upwards, so far so good, but it moves super slowly. And again, it's holiday period now, so I wouldn't get too enthusiastic here. Now we are, at least in the very short term, creating some sort of ascending triangle pattern. So if we take out 43.02, we might go a bit upwards and do something like this. The alternative would be just to wait for a stronger dip to 41.77 between these two levels. But ultimately, it's short-term bullish. But again, I wouldn't get too excited. This is the German DAX. And the German DAX, the general idea here has been just to buy between 12,811 and 12,521. And I'm sticking with that view. You know, we bounced once, we bounced twice, and we haven't really gone anywhere. And I'm going to continue to be bullish for now. The Dow Jones. So the Dow Jones, the idea has been to buy here if you wanted to. You can see here, unfortunately, we did slide below that trend defining level. And that means that I now are forced to be bearish. And I will be bearish as long as you trade below this high. And we're far away from the latest low. And just by looking at this, you know, this will be maybe a 50% correction. Let's see if we can put some fibs on this. Yeah, so slightly less than 50%. And again, I wouldn't really force it. Of course, if you're ultra bearish, you know, you think this is all wrong. There's a lot of people that think that this is wrong, that we're up at these levels, despite that the central bank are pumping so much money into the system. And despite that we might have a vaccine and we might be all good in this time next year. And if you're belonging to that camp, then you can probably sell here. Personally, I wouldn't be selling. I think it can go down, and maybe down here, and maybe early next week you can buy it. It really depends on how quickly this goes down. Here is the NASDAQ 100. So NASDAQ 100, you might remember this. We're trading sideways, high, 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 low, low, and break to this level triggers that move. We're going towards that level. You just spend a lot of time here, and here you got a head, left and a right shoulder. If I flip to a 30-minute, it's better, well defined. It's not like an amazing pattern, by the way. Head, left and right. Ideally, this one would be a bit deeper, right? But you have a big picture pattern and you got this short-term pattern. So there's no reason here to change biases here. And some of these companies that are part of the NASDAQ 100 are doing really good. So why try to fight the trend here? All right. So I'm going to continue to be bullish here. As for FTSE 100, FTSE 100 is fortunately a bit boring. It's trading sideways between. It has a bit of a bullish bias above this low, like that. And I do think we can probably. I mean, we might have some continuation here, but I wouldn't get too excited. It's not like an ideal time to trade this market right now. So yeah, if you really want to push it, you can be bullish above a 58.52, and then maybe just looking to be bullish here. Of course, if we take this level out, we'll probably trade lower to maybe like 56.48. But for now, maybe we'll do something like this. But again, I wouldn't really push myself here. I wouldn't really force this trade on here. Let's take a look at some of the cryptos. So this is Bitcoin, and Bitcoin failed, unfortunately. So you have this, which is an ascending triangle pattern, which is sort of a bread and butter, is something I use and I trade it all the time. And when you have a breakout like this one here, it's perfectly fine to go long on the breakout, put stop loss just below it. But you can see we traded all the way down. And let's keep an eye on this. We can put an alert on something like that. We'll get a notification next time it trades above it, because we can have what we call recompletions. So we might swing up, and if we do trade above this level again, then again we can look for this to trade much higher, but we're not there just yet. And I don't know if you noticed, but at least recently, you know, it hasn't been like a super easy trading in many currencies, big cryptos. For example, like Bitcoin Cash, I bought from here to here. Market continued higher. Of course, I should have kept it, but I didn't. And then the market slid some solid 12% from high to low. Actually, 27%. Sorry about that, 27%. I think it was Bitcoin that slid to 12%. I bought a bit here and it went upwards. And thankfully for that, because, you know, a few days later, or like a few hours later, I think like 1 day later or something like that, it went back to my entry. So I traded here and here. So it's more of like a trader's market now in cryptos. Unless, of course, you want to be a buy and holder, which again, I don't really recommend personally, because, you know, we've been at the same level now, here's around the same level since August 2017. And of course, if you sort of traded the ups and downs, you could probably actually take that back. We've been at the same level here since November 2018. So obviously, you have all these massive swings here in just Bitcoin Cash that you could have traded, and if you had just held it, and you know, you would be same levels really. All right, good. Let's see if you guys have any questions. I'm gonna open up here the YouTube page. If you're new to this, by the way, don't forget to subscribe and don't forget to like the video. Super important. If you like it, support it. If you don't like it, you don't have to press on the like button. It's all good. All right, so guess Stefan. Hi, Alex. He says, dollar CAD, is it a sellable bounce here, you think, below 132.50? Let's take a look at dollar CAD. So this is my dollar CAD chart, and my idea has been to sell on corrections. So we can do it like this. Look at it like this. Euro USD is at a level where it can be bought. GBPUSD is also in a level where it could be bought. Aussie dollars in a level where it could be bought. So if we're right there, it's gonna be right here as well. But on its own, it hasn't really corrected enough for me, and I will still look for that move. But realistically, if we look what's happening in all the other markets, we're not going to go all the way up there right now. Now, I'm a bit stubborn, so I'm going to still wait for that. But there might be reasons why we are not actually much higher here. And one is because, you know, crude oil prices are really close to trade to just near to their highs. And maybe people are anticipating something here that we will break out. I mean, I think we're going to break out higher. And maybe that is keeping the dollar CAD at bay. So what would I do? Well, I wouldn't trade dollar CAD myself. I would just trade Brent crude oil. And if I really just want to sell some dollars, I would probably just buy some euros against the dollar. We can take a look at EURUCAD actually. EURUCAD. So in EURUCAD, this is a daily chart. You can even see, at least recently actually, that the euro has done better. But if you look at it from a big picture perspective, it did actually stop in its track here, and we are a bit bearish here. So actually, I don't want to complicate it too much, but one could buy EURUSD, and on a break to 55.80, one would short EURUCAD. So what happens there, you're effectively trading dollar CAD, but you're trading in at the right times, if that makes sense. Because right now, at least in the short term, and then the big picture, euro is winning against the CAD. So it's better to buy euros than buying CADs. But on the break here, then that would change. But again, it's getting a bit too complicated. And that's why I would just keep looking at something different. So I have actually I like Euro Aussie. So this is the Euro Aussie, and you can see here, let's look at a 6-hour chart, that you have a very sweet, you got a very good levels here. So you got this, which is 65.55, that's resistance, and you have what looks like a massive ascending triangle, and this by itself, this massive ascending triangle, suggests we can go up with 450 pip. That takes you up to something like 170, yeah, 170.17. But even here in the very short term, you have something similar, like a range at least. And here as well, you have a target. So we haven't breached that level. This market by itself is already up a bit today, but I will keep a close eye on this one. My preference is for this market to stay where it is, and then it pulls back a little bit, maybe to 65 tomorrow. Well, actually, I don't care. It might trade sideways, yet tomorrow breaks upwards. We could potentially have a breakout today already. The question is though, where are we going to put that stop loss? So maybe down here at 64.75, but that's why I would prefer if this can wait another day, because then maybe tomorrow, if we're really lucky, it will be like this. It will be like this, and it would trade like that, and then we can buy super close, and we can put a nice little stop loss just below, and that would give us a very nice healthy risk-reward ratio. And then when that happens, I don't really care if we go up to 171. I would just be happy for it to go to something like 67, or even the first target, because so we'll be looking at potentially like a risk-reward ratio here of maybe 3.4. I mean, if actually I can reduce this, then 4.6, and that's it really. Okay, Stefan, I hope that helped. I'm going to, we're going to wrap things up now. Again, if you like it, don't forget to hit that like button, and don't forget to subscribe as well. It's actually super easy. Down here, when you're watching, you can see here, subscribed on me, and then just click on subscribe. Then there's that little bell button. If you get that little bell button, you get notifications as well. If you have the mobile app, like the YouTube mobile app, you actually get like a comment here. It tells you like watch live now ATFX daily market update. So it will show you that, and you don't miss a thing, because I don't have a fixed time when I start these webinars. Okay, have a great time. Have a great day, guys. And if you're on holiday, keep on enjoying that. And if you're still trading, happy trading. And I'll see you guys on Monday for the next market update. Thank you, and bye-bye.